development finance isn't charity anymore. It's been viewed that way in the past. But what we're seeing, and the data proves it, is that it is commercially viable, it's profitable.
Lori, Qahir, thank you so much for being here. Lori, this first question is for you. What would it take for private investors to be brought into emerging markets?
Well, there are at least three things. The first is strong market fundamentals, so the legal, policy, regulatory environment that are conducive to private sector investment. Also, macroeconomic stability, a handle on foreign exchange and inflation, and of course, investable opportunities, depth of market for investment. The second bucket is around local capabilities and market depth. So in addition to a skilled workforce, we need local financial institutions and intermediaries, as well as developers that are willing to invest in their own markets as sort of a signal to private investment from overseas. And we need data, market intelligence information to help inform investment decisions. And the third area is catalytic capital. And this is where partnerships with development finance institutions like FinDev Canada come into play. And I'll give just a quick example if you don't mind. In 2018, we made a $20 million equity investment in Climate Investor One to support energy transition across Asia, Latin America, as well as Africa. 7 years in, they've been able to raise $800 million, supporting 16 different projects. 6 are already operational. This is energy transition on the ground. This is clean energy. It's diversifying energy matrix, and it's supporting economic growth in those markets. It's a really good early example of how catalytic capital, donor funding, DFI capital has been able to really mobilize additional private investment into emerging markets.
Qahir, the development finance landscape is changing. Where are the opportunities you see for innovation and reform?
The landscape has dramatically changed recently, with overseas development assistance dropping by almost $50 to $70 billion, which means that private sector's role is so critical. And as Lori said, some of the fundamentals are really important. We need more investment in blended finance. We need better interpretation of regulations that don't penalize emerging markets. We need to remove biases from country risk ratings. We need local data. It's all stuff that we know. It's not necessarily new innovations, but it's more scaling up what we know what works and removing those impediments that have held things back in the past.
And this question is for both of you. If you had a message for investors about the future of development finance, what would it be?
So for me, I think development finance in the future is really about unlocking private capital. Emerging markets and developing economies hold the key to global growth, to climate innovation, to entrepreneurship. But they need catalytic capital or blended finance really to unlock that. So development finance institutions and other forms of public capital are really that enabler. So private investors who are willing to come to emerging markets have an opportunity not just to make commercial returns, but also to help the future, can support economic growth, social advancement, and climate action.
And for me, I guess the message is development finance isn't charity anymore. It's been viewed that way in the past. But what we're seeing, and the data proves it, is that it is commercially viable, it's profitable. And so my message to investors is to lean in. The risks can be managed and the returns are viable.
Thank you so much for being here.
Thank you.
Thank you.